Hello, this is Paul Gibson with the Academy of Trading and Investing. It's a pleasure for me to be with you again. Today we're going to help you learn how to find appropriate investments through using the Morningstar method. I think you'll appreciate this, as this is a fundamental approach. Helps you to not only find tradable stocks, but also helps you to find good companies to trade in, which I think is a good combination. Let's get started. Using the Morningstar function, we need to refer back to the video on fundamental analysis that I did previously for a more in-depth look at how to use the Morningstar.com features to analyze a stock. This is very important to understand what a company is made of financially, who they are. Otherwise, you may get involved in a company you don't want to be involved in through an accident or perhaps through an unexpected market turn. You could be stuck with a stock that you don't like. So it's important to understand, at least minimally, something about that stock. It doesn't take a long time. Once you become adept at analyzing a stock for fundamental foundations, it should only take you maybe 10 to 15 minutes maximum to understand that company enough to be comfortable enough to invest in it. We will cover some of the basics in brief today, but it would be important that you go back and understand it through the video, and more importantly, you might want to go back to Notes from a Profitable Investor book that is published on Amazon.com. That would be a great foundation and give you a much more in-depth approach. Also, as always, we're available at Academy of Trading and Investing. academyofti.org is the website to help you through coaching if you would like that. We'll be glad to help you by giving you some additional insights and helping you to learn and adapt to the skills and become proficient at the skills necessary to make some money in the stock market. It's not a big thing to learn this. You've learned how to drive a car. You've learned how to do your job at work. This won't take you years and years, perhaps 3 to 6 weeks, maybe 12 weeks to understand the concepts, and then you'll be able to invest, almost like a professional. And of course, the more experience you get through virtual trading and other methods, the better the trader you will be. Morningstar uses several different methods to rate stocks. One of the methods they use is the star rating method. Not all stocks are rated by Morningstar with the star rating method. The reason for that is that Morningstar doesn't necessarily know or have all the information necessary to be able to rate a stock. Therefore, they rate the ones that they can based on the information available to them. As you know, garbage in, garbage out, some companies just don't have enough significant information or predictable information to help Morningstar do the rating system. Nevertheless, Morningstar does rate about 1,200 of the 3,000 or 4,000 stocks available on the stock market. So, what is a 5-star stock? To begin with, a 1-star means that the stock price is significantly over or higher than the calculated fair value or intrinsic value of the stock price. As you may recall, intrinsic value means if we broke this company down into its financial basics, what should the stock price be? That's the intrinsic value. The large investors look at that number all the time before they invest because they want to buy a stock at a discount. So they'll follow the market functions of the stock price and be able to buy that stock at a less than fair value amount if possible. This is the Warren Buffett method and the method used by many of the major investors. 3 stars means the current price is about even with the fair value, and 5-star means that the price is significantly under or less than the fair value. As you might guess, 2 stars means somewhere between 1 and 3, and 4 stars means somewhere between 3 and 5. You probably have already figured that out. Let's go to the Morningstar homepage. As you can see, I have done the pull-down menu on research, and we see mutual fund stocks, ETFs, bonds, best investments. I'm going to click on research and then click on stocks to see what we can come up with on the stock page. Going to the stock page, we see that we have several different approaches here. There's a lot of news media here going on, and then we have ratings and picks over here. We're going to click on the 5-star stocks ratings to pull up a list of those 5-star stocks. So, having done that, we see a list of 5-star stocks. Now, just a side note, this 5-star stock listing is only available to premium members of Morningstar. Morningstar also has a free membership that we'll talk about a little bit later on. But to get this list of 5-star stocks, you must be a premium member. It's only about $100 a year, plus or minus, which to me boils down to be about $8 or $10 a month. If you break it down month by month, to me it's well worthwhile, because now I have a resource that allows me to get definite, in-depth analysis of companies. This is about one of the few places that's very succinct in being able to get this kind of information in one website. Now, you could have several websites to go to get similar information, but Morningstar is very concise. You don't have to have a premium membership to get that fundamental information on a company, but to get the 5-star rating list, you do, as well as some other features. So we see that Morningstar has rated these stocks. I have clicked on the stock rating to rank these by star value. So to begin with, they come up in alphabetical order over in this column. But if I click on the Morningstar rating star system, it will rank these by star, and now you can see I have 5-star stocks. This goes down probably 25 or 30 stock names. We'll just focus on this page for the moment. Morningstar also does a moat rating. Moat means competitive advantage. As we can see, Dana has no competitive advantage. CBS Corp Class B has a narrow advantage, in other words, a small advantage in the marketplace or its industry. Philip Morris has a wide moat, which means large competitive advantage against its peers in its industry. As you may know, Philip Morris produces many products, but their focus is generally on tobacco-related products. I'm what they call a moral investor. I kind of don't like to support companies that produce things that I don't think are good for the human body. So we'll skip that one. Going down here, we see narrow, 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 narrow. Oh, here's another wide moat. It happens to be Enterprise Products Partners LP, and the ticker symbol is EPD. If I click on the ticker symbol, it then takes me to Enterprise Products Partners LP homepage. And on the homepage, I see that on this day, the stock price is currently $26.30. It's in red because at the moment, the stock price is lower than the opening price. And here's a brief chart of the stock price function during this day. We can see that it's down 2 cents from opening, which is down 0.08%. Not a whole lot, but nevertheless interesting to know. We can also look at some other significant information here as referred to in the video on fundamental analysis. Good information. We also see that there's a summary of the company, which is good to read, and we know what we're investing in. So it's a good idea to go over all that. We click on the summary and we see that enterprise quality asset base allows it to land new products in uncertain midstream environment. Good to know. So there's kind of a positive approach here already. We also see over here the fair value of the stock is $35.50. Currently the stock is trading at $26.32. That's pretty good. That's a large discount. I might be interested. The 1-star price, which means overvalued, would be $44.38. The 5-star price is $28.40. We see that even at this point, the last closing price was below the 5-star price. Very interesting to me. We can then go through the rest of the analysis process by looking at news releases that are related to this company and its industry. We can also look at the history of price to fair value. We see that in the last several years that the stock price has been less than the fair value. Fair value is in red, last close is in black. It's generally below its fair value, which means this company is generally undervalued. Wonder why? Let's read up on it, find out. Nevertheless, these kinds of companies that qualify for a 5-star rating and are larger companies tend to be in this kind of range. Does that mean it's not a good investment? Does that mean the stock price will never go above its fair value? Does not mean that. But this information allows us to see that there may be a strategy that we can use to benefit from this stock. We can also move on to trailing returns. So total percent return, 1 day, 1 week, 1 month, 3 years, year to date, 1 year. 3 years. As you can see, that on a 3-year average, the total return of this company is 8.64%, where the industry that it belongs to is only 3.35%. The whole market is 15.87%. So we now know that this is a midstream company based on its total return. We can also move on to valuation. And here we can get our revenue structure. You can also see balance sheet information. I'll let you analyze that at your own convenience. Moving right along, we can also see that we have what we call the market multiples. Price to earnings, price to book, price to cash flow, etc., etc. We can take a look at that, see how it compares to the index 5-year, and a history right there of its performance based on market multiples. Some people are interested in that. We can also see its operating performance information, which means return on assets, return on equity, gross margin, operating margins, etc., etc. Good information. We also see that we have some growth here, not only of revenue, but of dividends. So in 2016, the dividend was $1.59, 2017, $1.67, 2018, $1.72. Currently, the dividend is $1.77, so it's up. That gives us confidence that we can see that this company is growing and willing to reward its investors. Well, let's go back to the quote page. There's other information available on the fundamental analysis side, which we won't take a look at this time. Once again, I refer you back to the video on fundamental analysis using the Morningstar method. So we're back to the quote page. Let's take a look at the price chart of this company. So we can click on this little feature here, show full chart, and that takes us to the charting system. We can look at 1 day, 5 days, 15 days, 1 month, 3 months, 6 months, year to date, 1 year, 3 year, 5 year charts. We can also set up our analysis tools over here if we want to. I have selected to use a crosshair function. I've also selected to look at candlesticks, which is what we're seeing here. This is all great information. However, I like to use stockcharts.com because it gives me even more tools and I'm a little more familiar with it. You may have a stock analysis website that you like a lot and are familiar with how to use its tools. You're welcome to use that as well. So Morningstar gives me great fundamental analysis information, but I prefer stockcharts.com to give me the technical analysis information that I'd like to see. Now this is a chart using the free function of stockcharts.com. As you can see, I've loaded up moving average 13, moving average 20, so 13 is in blue, 20 is in red. I've also loaded Bollinger Bands, which is the green lines. Once again, you'll want to look at the video on technical analysis to understand Bollinger Bands. Bollinger Bands is generally speaking just a mathematical moving average of the high and the low, of the expected stock price movement. And as the stock price becomes more volatile, those bands move further and further apart. I can also take a look at the MACD. We see that the black line, which is a fast line, is below the red line, and here it crosses over and goes above the red line. So this is a buy point, possibly. The stochastic RSI is also telling us that we have a sell signal here, which means the stock price is high. So we're in bullish function here. Sell signal, which means we're in bullish function there. Just because the stochastic RSI is above the 80 line doesn't mean that we should automatically sell. We still want to combine all of our analysis techniques to see when the best time is to sell using candlestick analysis, our confirming oscillators, as well as our intuition in the news media. Bad news can cause a stock price to go down. Good news can cause a stock price to go up. In this case, I'm going to suspect that the good news was earnings reports at the end of December. And we see the stock prices just kind of trailing along here. Now with this chart, I can also draw a support line. I feel like, and it's up to you to determine what that is, my long-term support line is right about this level, because this is where it tends to bottom out a couple of times. You could go a little bit lower if you wanted to. To me, this made more sense. You choose. I can also draw short-term support lines, which in this case is right about here, and long-term resistance, shorter-term resistance lines is right about here. This gives me an idea that in the last several months, we're in a bearish function. Good, I need to know that. I can trade a bearish function. All these other indicators sort of confirm that. If we look at the shorter term view, a little bit closer look, we're looking at a 3-month period here. We can get a better view of the candlesticks. And I see that we have some up and down movement over here. To me, this is forming up a possible W for win. In other words, a double bottom. It's a bottom here. I don't know, but I am suspicious that there might be another bottom over here in a few days. I don't know that, so we'll have to watch it. But that would indicate that there's a potential reversal of the stock price movement. The MACD is also suggesting that. Volume stays steady. Usually you see a larger spike in volume in a declining market, but the volume is starting to reduce. That tells me there's a possible trend change coming, as well as my candlestick patterns here. 2 red candlesticks in a row tells me we're in bearish function. But once again, I'm suspecting that the bottom is over here, and this may bottom out and reverse again and start going up. I want to be prepared for that. So let's take a look at the non-premium screener. Let's imagine that you would like to screen a stock using a free membership to Morningstar. You cannot use this stock screener unless you subscribe, which means you just enter your email address and create your own password. Then you can get automatic entry into the Morningstar website for free. Once again, free. We like free. So I'm going to take a look at the tools section, and we'll go to the basic stock screener here and do a little maneuvering there to see what we can come up with. There are also some other reports that you might play with to become familiar with those, but today we're just going to look at the basic stock screener. So when I go there, I click on that, it takes me to this page. I see that I can choose stock sector, Morningstar type sector, Morningstar equity style box, and minimum market capitalization. I'm just going to leave that blank for now. If I need to, because I get too many selections coming up, I can go back and refine this. But if you have a particular idea about what sector of the economy you want to invest in, or stock types, you can make those adjustments here. Now I also want to invest in good companies, so I've selected growth grade of A, B, and C, profitability grade of A, B, and C, financial health grade of A, B, and C, which gives me a pretty good approach. I kind of don't want to invest in D and E rated companies, although the lower the rating, the more volatility you get in the stock price. Just be aware of that. If you're interested in day trading or short-term swing trading, you may want to include some stocks with D and E ratings. Scrolling down the page, I see that company performance, I'm going to leave that to any. Stock performance, I'm going to request that the year-to-date total return be greater than or equal to 20%, which tells me the stock price is probably going to be also a little bit volatile. The rest of these I'm going to leave at any. I like to look at PE ratio. So the trailing PE ratio should be less or equal than 50. That will give us a lot of volatility. Anything above 40 is going to be giving us a lot of volatility. So I'm going to look at 50 because I do want some volatility. I also like to see PE ratios compared to growth ratios, or what's known as the PEG ratio, at around 1. That's sort of the perfect stock, but once again, you don't have to do that. Once we have made these selections, I can then click on Show Results, and it takes me to this page. And it tells me that my search has come up with 27 stocks, and it has listed 25 of those stocks on this page in alphabetical order. I'd like to see it in order of price, though, because I like to choose stocks probably $50 or $60 in value and less. That gives me a little more return on my investment when I invest in a particular stock. High stock prices may give you some volatility, but the percentage gain is less than lower stock prices, usually, not always. So moving right along, I'm going to click on last close, and it's going to reorder those stock prices, and I come up with this. The stock prices start from low to high, and you can change that. You could click on this little arrow here and it'll change it from high to low, but I've chosen low to high. I've also gone through this and looked at some stocks. I've clicked on some random stocks, Ford, ACO, Tegna, just kind of randomly went through here, a little bit based on market cap size. Huge financial companies tend to be more sluggish in their performance. So I've left that out, but I did choose MetLife down here. It's not overly huge. We'll see if I can get some volatility there based on its performance. I don't know, but there's some stocks I look at. Then I can click on Test a Portfolio, and it'll introduce these stocks into a separate portfolio that I can keep track of. So we look at the ticker symbol. If we wanted to, we could click on the ticker symbol itself and go back to the quote page. That takes us back to the beginning of our video, how to start through that process. Some possible strategies. For long-term investing or value investing, I might have a strategy of buying and holding this stock. Or I might do a swing trade. I could either short the stock if I think the stock price is going to go down, or I could go long on the stock, in other words, buy the stock and hold it for a short period of time, a few days or a few weeks, to see if the stock price will go up based on the candlestick pattern that I viewed and my overall opinion of the fundamentals of this company. I could also do some option trades. If I think the stock price is going to go down, I can buy a put. If I think the stock price is going to go up, I can buy a call. Once again, if I think the stock price is going to go up, I could sell a put. And if I think the stock price is going to go down, I could sell the call. So we can take opposite procedures here. Selling options is a cash flow strategy that generates cash flow to you, but the only thing you get from selling the option is the premium. You don't benefit from the stock price movement. When you buy the option, you benefit from the stock price movement, but you have some expenditure out of pocket. We could also talk about doing some straddles or strangles, in other words, combination puts and calls. We won't do that in this video. There are other videos on the academyofti.org website that show you how to do options trading. Once again, this is Paul Gibson with the Academy of Trading and Investing. It's been a privilege for me to be with you today. I'm excited to work with you. If you have additional questions, please go to academyofti.org. Would be glad to answer your questions, have a conversation with you, see if we can help you in any particular way, give you additional references. Please contact us there. By merely enrolling with the academyofti.org, we will send you then a free newsletter every month. Also, a foundational approach would be to purchase the book, Notes from a Profitable Investor. This is available on Amazon.com. It's also available in Kindle format for those who like to use their mobile devices. We'll look forward to speaking with you another time. Please come and visit us. Consider coaching as a way to accelerate your process and learning how to use these techniques in a profitable way. Start making money very much more quickly than you would if you just did this on your own. We'll look forward to speaking with you.